Welcome to the fifth video in our onboarding series for the Stock Volatility Box platform. So far, you've understood how to gain what is the overall volatility for the day along with for the market. You've understood how to use that to build a bias one direction or the other and bring that bias into the scanner where you can pick and choose and find trades that work for your trading style. You've understood how to use the charts to analyze what's going on in any one of these symbols, to analyze and interpret the daily models, the hourly models, and the overall daily trend for any symbol at all. So this is powerful information you now have. After that, you learned how to import these models inside of your ThinkOrSwim platform as well. So now you have this available both inside of our web platform along with ThinkOrSwim to make smarter decisions. Now in this video, on that topic of smarter decisions, we're going to focus on the backtester. And the backtester is a very powerful tool that we have inside of our platform that you can use to essentially find all of the volatility clues you want for any given market. Now on the left-hand side, you'll find all of the different settings, the different filters you have at your control to test different backtests. So I'm going to use Apple as an example, but if you wanted to run multiple, just comma separate and you'll be able to see a basket of stocks. So we're going to use Apple for right now. I'm going to open up strategy type, and there I've selected all strategies. We have 4 different strategies here. Let me give you a quick overview of each of these strategies. The first is the blind breach. This is simply a breach of our volatility box models, no other trigger, no other filter. So a blind breach is simply measuring how effective is it when price simply breaches our volatility box models, doesn't go outside, but it bounces from there and it bounces back up to the cyan line. So it's a very simple entry at the cloud, stop outside of the models, target at the cyan line, both long and short setup. ORB Confluence takes that same setup, but instead of just looking at all charts blindly, it looks at places in which our charts are overlapping with the warning opening range breakout level. Specifically, we're looking at the target levels, stretch targets, trying to see if there's any confluence with the stretch targets and our volatility box models, looking for a place where we might have a reversal anyways. That's what the ORB confluence is. The next one is a gap fill, and that one should be fairly obvious. We're looking for gaps on the daily time frame, and we're looking for those gaps to be filled and for that to be a confluence while we have a volatility box breach. If that happens, that's a gap fill. Very few instances of this, but when they happen, very powerful. And finally, at the edge, one of my favorite setups. At the edge is where you're taking advantage of an entry where most people have their stops, the outer edge of the clouds, and looking for a move back up in this direction. We have a 1 ATR stop here trying to give this some room, 1-2 ATR depending on what your risk tolerance is. And I like to go for a risk 1, reward 2, and that's why I tell you on the scanner, the stop hit is oftentimes a great place to find those skewed risk to reward setups. And at the edge is a great way to measure, is this a good setup or not? Is this something you'd want to trade? So that's a quick overview of strategy type. Model type, we've discussed. You have the choice between both daily and hourly models. I'm going to leave this setting as all models so we can see how are both models performing on both the aggressive and conservative first for both long and short, and then we're going to dive deep into Apple. So let's start with all strategies first and just run this back test, see what we're left with. Now, what we see is a win rate of 44.5% with a positive P&L, and you can see that very clearly with this graph. Shows you that Apple, with this strategy or with all strategies, very good setup here, leads you to an overall positive P&L. Now, the win rate leaves a lot to be desired, and that's true across longs and shorts. So let's see if there's one setup in particular that we might want to pay a little bit more attention to. Seems like shorts inside of Apple have been working quite nicely. So let's go ahead and focus a little bit more on the short side direction first. Let's see what just the shorts give us. The shorts on their own give us a healthy P&L, positive 20.50. And if we come down, we can see what are the exact trades constituting to this. Now, before we dive into all that layer of detail, you'll find these cards at the top. And those cards give you, I think, all of the information you need along with this graph. In fact, the graph is probably a better first place to get started. Simply look first to make sure that this graph is above zero. If this graph is below zero or this P&L is red, simply ignore that particular setup. It's not one worth pursuing. The next thing I like to look at is the win rate. Now, win rate is one that I pay a little bit of loose attention to. A high win rate gives me confidence, but a low win rate doesn't dissuade me either, mostly because I know that I can use things like the at the edge setup or something else to balance this setup back out. So now I want to dive a little bit more into short side setup, see if there's one strategy in particular I might want to focus on. Let's start with the blind breach first. Blind breach, we can see, has a win rate of 51%, so it gives you an idea that whenever price falls inside of our models here, about 50% of the time we tend to bounce, and that's for a short side setup. Now, is that with the daily or the hourly? So let's go ahead and start with the daily here. I'm going to shrink this, rerun the backtest. We can see daily has a positive P&L, but this backtest here, a little bit, you can see it's fluctuated a little bit. And in fact, we've even come all the way back down to zero. So now let's go ahead and see what the hourly looks like instead. I'm going to rerun this. Now with the hourly, we see better performance and we can see a little bit more consistent growth. So inside of Apple, feels like the hourly models actually offer you a better edge. Whenever we breach the daily models, the clue that I'm gathering is that there's a lot of volatility inside of Apple, and you really want to be using something like the at the edge or wait for that volatility to calm down, settle down a little bit. Maybe do something like when we get to indicators, we'll discuss this, but do something like use the market pulse or a momentum cross as your actual trigger, your actual cue to get in, or the edge signal confirmation, be a little bit greedier. So you can use clues to help figure out what you want for your entry. Let's go to ORB Confluence next. You can rerun this backtest and see what this P&L looks like. Notice that drastic difference in the P&L. This gives you an idea along with the win rate that, hey, this is something you want to pay attention to whenever it happens, especially inside of Apple. Let's look at gap fill. Gap fill, negative. Okay, so we can ignore the gaps. Let's look at the edge. At the edge leaves a lot to be desired here just on its own with the hourly models. What happens if we use at the edge with the daily models? Does that get better? No, that gets worse. So at the edge here, not really something we want. We can see ORB Confluence out of the bunch of setups that we've traded are in fact the best ones. So whenever we do have that confluence, the live scanner will find that trade and it will display Apple for you automatically. You'll be able to see the expected trade value, all of that good stuff directly on the scanner. But if you want to actually analyze this, do some homework, do some research every weekend, or maybe live before the trade, the backtester is the place to come, and the backtester is the place where you can find some granular information. You can also do things like find what is the trade expectancy, what's the average gain versus the average loss, how many trades are being contributed to this overall backtest, and what are those actual trades so you can go back and study them in more detail. See things like the duration of the trade, how long, how short, if there's any other clues that you can gather from this particular trade table. Is there a time of day in which the trades tend to trigger more often than not? Things of that nature. So that's how you use the backtester. The backtester is designed to help build more conviction in every single trade idea. One more time, if I was to recap what I think the main things you'd want to pay attention to are, when you input a symbol, focus on these strategies and see how this P&L graph fluctuates. You want to find strategies which look like this. Very clear P&L graph where you don't really have to squint your eyes to see that it's going from bottom left to top right, in which this is a rising P&L over time, and it has a positive P&L with the win rate. That's one that you could actually represent, follow the strategy with every single time, something realistic. In the next video, we're going to dive deeper into watch lists. Watch list is a neat feature which allows you to create your own list of symbols and take those lists of symbols and plug those into the scanner along with the indicator generator. It really helps streamline your workflow. So in this next video, I'll walk you through how to create your own watch list. We've already done an example inside of liquid tickers, but we're going to go through a new example, a fresh example slowly so you can follow along and create your own watch list. See you in the next video.